Okay, I think we can start. Welcome everybody. I'm Roberto Ferrari. I am the lead of the digital reinvention community here in Qorus, and it's a pleasure for me to host this seminar together with our Teradata partners. Let me first give you a couple of things on instructions on the webinar itself. First of all, this webinar is going to be recorded. And secondly, there is a session that will be on questions and answers. You can see at the bottom of the video, of the screen, that there is a chat button. You can use that one in order to write your questions to our speakers, so that when we go to the questions and answers session, I will moderate, so we will pick up your questions and we will ask our speakers, ask them to our speakers. So, as I said, this is a pleasure for me to have to host this seminar on data analytics and specifically accelerating data analytics, how financial institutions can really learn from other industries in order to close the gaps that they have and fasten the belt, if you want, and go and embrace completely the new age of data analytics. So that's really the purpose. Let's go of the day. Let's go to the agenda of the day, which is pretty simple. So I'm doing the welcome and introduction. Then we will have a panel discussion with our speakers on the insights from the report that we have run together with Teradata on data analytics. I will be talking in a few moments on the report itself. And as I said, after the discussion with our guests, with our speakers, we will have a Q&A section, a section with a point of view and closing remarks. So the agenda is very much focused on what we have learned from this research that has been run, as I was saying, with the Teradata. So let's go to the speaker first. So we have Graham Carr, who is the leader, the senior financial consultant, so specifically on financial services industry on Teradata, together with Monica, who is the industry consultant also on Teradata itself, Andrew Cross, who is a managing director of Cross Risk Consulting, very much expert itself on data on financial services, as former director of risk in analytics in a national NatWest group, for instance. Then we have the pleasure to have also as a guest Rajiv Malan, who is very much an expert of the industry itself and digital transformation lead itself, and a transformation leader in his own company, and myself, who I mean, as I said, in Aditya Birla Capital son, with quite a long name, I must say, Rajiv, because we will talking when we talk about Rajiv on his own experience, and myself, as I said, the digital reinvention community lead. So let's I would say that I would go straight in this very moment to just give myself a couple of words, introductory words on Teradata, and then leave it really to Graham, that can be much better than me in explaining on what Teradata does. So Teradata, if you want, in my view, is a global technical tech company, very much a global reach, very much a cross-industry reach, specialized on connected multi-cloud data platform for enterprise, so at enterprise level. And so they have a great deal of projects and experience from other sectors and on this specific matter. And so that is the reason why we're this research with them, given the type of global reach and reach of from different categories, industry themselves. So I leave it to Graham to explain a little bit more what is Teradata we can also switch to the next chart, and I leave it to you, Graham.
Thank you, Roberto, and thank you for the audience for taking time today to join us, or anyone that is going to be listening to this on the recording. My name is Graham Corr. I've over 20 years in banking experience across regulation, finance, risk, and data and analytics. I joined Teradata 3 years ago, and I found since joining that they are the beating heart of banking in EMEA, working with a customer base that most organizations would die for. For those of you in the audience who are unfamiliar with Teradata, we do a lot for our customers. Broadly speaking, we create value for our customers in 3 different ways. Firstly, we enable them to connect their data warehouse applications and data to data from across the rest of the enterprise, and specifically to data in Hadoop-based and object store-based data lakes, so that users have more access to more data more quickly. Secondly, we enable them to deploy advanced analytics and machine learning at scale throughout their organizations. And thirdly, we enable them to support what you might call traditional data warehousing and business intelligence at extreme scale and in the cloud, so that they can optimize end-to-end business processes like demand-driven forecasting and omni-channel customer management. In banking, our customers use Teradata across their organizations, from marketing to AML, compliance, risk, finance, and reg, just to name a few. 18 of the top 20 global banks are customers of Teradata, from the HSBCs and Lloyds, BNP Paribas, UniCredits, through to the Standard Chartered's, the Royal Bank of Canada's, the JP Morgan Chases, and in addition, we have a significant number of the challenger banks. We have similar brands as customers across retail, telco, pharma, manufacturing, oil and gas, as well as financial services, which is why I'm delighted that Monica is able to join us, who has experience in many of the non-financial services industries. So why did we sponsor this particular piece of research? Well, we work with partners like Qorus so that we are closely aligned to the industry, and we keep abreast of the latest challenges so that we can support our customers and prospects through them. By getting involved with this type of research, we ensure we've always got the right solutions on a timely basis to help. So without further ado, I'll hand back to Roberto to introduce the research.
Thank you very much, Graham. I'm trying to activate my video, so hopefully this is going to work. All right, should be okay. Let me know, please, if you see me, because I have problems in reactivating my video. Do you see me? No, I think I have to. Can you hear me?
We can hear you, Roberto, and we'll remember what you look like.
Okay, sorry for that. I'll come as early as possible video. So let's talk about the research. So as Graham was saying, Teradata has got also a very strong deal of business projects with a lot of, really across the globe, a lot of financial institutions, strong banks, large banks, financial institutions across the board. So the idea was really to create this research, which is both quantitative and qualitative, in order to really have a view, an understanding of where we stand today in financial services across the globe in terms of adoption of advanced analytics, I would call, and data analytics. There is a great deal, obviously, of implications on that. They stem from risk to cloud, to regulation, to organizational and structural silos or culture as well. So the idea was to have it also qualitative, in order also to have a little bit more in terms of insights that sometimes maybe don't show up when you just do a quantitative research. So that's the purpose. The purpose is to see where do we stand today, and given the experience and the reach of Teradata also in other industry, to try to get from this webinar also an understanding of really what are the gaps, what are the insights, if you want, the inspirations that we can take from those other industries. So the research is really being global. There are interviews from Peru to Singapore to Africa, and obviously United States and Europe. So it's really very much insightful. I really enjoy to read the single interviews which are part of this report. So it's the report itself is going to be sent to you, to each of you participants of this seminar, and it's going to be also sent with a link to this webinar, so to the registration of this webinar, so you can have also a recording of that. And then this is going to be published on our website, on the website of Qorus. So it's going to, you will find that also that. So let's just allow the time to get the link into the report, and then you will get it via email as you register. So I would definitely go then to the panel itself to start really talking about this research and getting the insights that we were talking about. So, so I invite Graham and Monica and Andrew to be with me in order to really start this this conversation. So let's talk. So there are a few arguments, which are few topics, if you want, which are really coming out from the research, which seem to be very constant, very steady, and very interesting themselves. So let's dig a little bit into each of them. We have identified 4 of them. So let's talk about the first thing, Monica, is about the gaps. So we said we could see also from your experience from the research that yes, data analytics is being embraced by the financial industry. And also at a certain level. I mean, all the discussion, the interviews we had with the chief data officer and the leaders, it's clear that there is a certain movement, I would say, on that. So it's taking place. Yet there is still a gap, and there is still a speed that needs to be reached by the financial service industry versus the other sectors. So what can you tell to our audience and to the financial institutions managers on what kind of learnings you can take from the other industries that could be valuable on how to speed up to the financial service sector?
Yeah, so I think financial services, for me, the 2 industries that they should look to for insights and experiences are retail and telecommunications, or telco, because looking from the outside, these are 3 industries that were forced down a path of digital transformation, whether they liked it or not. It was a matter of survival. And they also have similar business models in terms of omni-channel complexity, especially the retail banks, where they're B2C, and also millions of individual customers, which have relationships between each other as well, householding and friend groups and so forth. So these industries are good ones to look at. And the telcos in particular should be interesting. The reason being is because telcos, they're a technology industry. They're always spearheading at the forefront of technologies, be it 4G, 5G, and they're driving that forward. And the same is true, in fact, for their data analytics environments. They realized very early on that data will get them forward, will accelerate the business, like the other physical assets. And so they're very early adopters of modern cloud-based data ecosystems as well. So they've got 2 important assets. They've got their network and they've got their data. So this is why I say this is a great one to look at. And if you look at individual examples, of course, across the board, they're not going to be equally excellent. So you need to choose who you look at. But one example is Saudi Telecom, that back in 2019, they had a corporate strategy that was sponsored at the highest level. And it was called the DARE strategy, where DARE is an acronym, and the D stands for digitalize. And the reason they wanted to digitalize is that the way they saw they could drive efficiencies. The A is accelerate, to accelerate the performance of their core assets. And here they have, remember, the 2 big assets, one of them being data. R is reinvent. We're reinventing the customer experience. And that's interesting because already they're talking about how they're using the data in the context of growing the business by keeping their customers happy. And finally, the E is for expand. expand into adjacent sectors, adjacent offerings, and so forth. Now, in the D stands, or in the DARE acronym, D stands for digitalize, and the rest are all very data-based. So this is a great example, a great industry to look at. But then if you ask the telcos and the retailers, they don't think they're good enough yet at SIA, at customer experience. They benchmark themselves in the digital natives. So they don't think they're good enough. And also outside this of the customer experience, I think there is more room to improve there as well in terms of the retailer sustainability and supply chain, the telcos as in network analytics. So in general, yes, two industries to look at, but really understand they're improving too.
Okay, I mean, they are very good insights. It looks like to me like you have first to prepare your grounds and from a technical standpoint, and then you can really scale up to thinking about how to improve the user experience and how to really use data in order to generate more revenues and so on. And on the other side, we have to think that financial services, as it happened for the telco, they are also a target somehow of the big tech. So, I mean, obviously on data, they are a very strong benchmark. So there's a kind of competition you have to bear in mind every time. So, Andrew, I leave it to you. This question is, so how do you see that from a financial service perspective? So on this, so how much they are really looking into other industries, and which kind of gaps they are really trying to close now?
Yeah, thanks, Roberto. I think historically financial services has been quite insular, and partly being regulated, partly from the mindset of how the organizations have been managed. But it's interesting when you read the interviews in the research where you have got CDOs, so perhaps they're at the more positive end, but I think there definitely has been a huge amount of progress, and certainly a recognition that not all the answers lie within financial services. I was particularly caught by the comment from the interviewee from Simone Steele from Nationwide, who highlighted the role of fintechs, and in some ways, I think we've seen in financial services, even if they may not look directly at some other industries, that they probably are effectively doing that, because the fintechs are disrupting and bringing new innovations into financial services, and they're getting a lot of their ideas from other industries, as Monica said, particularly retail and telco. So I think that's making a big difference, and we can see already, that the customer experience that you now get with pretty traditional banks on their apps is pretty good. I mean, most of them have made huge strides on that area. So I think that sort of customer facing side, I think that there's been a lot of progress. I think there's still quite a ways to go, and perhaps I think in some ways all industries feel that they're the big digital natives, whether it's the large tech companies, are the ones where the real threat comes from. So I think everyone needs to be on their game, and so I think improving customer experience has been a lot of progress, but really reinventing how the organization works digitally. I think there's a lot of good progress, and that the interviewees bring some of that out, but there's clearly lots to do still, because it is difficult to make change in large organizations. So core things like credit underwriting, there's been a lot of investment in anti-money laundering, where very data-driven processes have been improved tremendously. So I think that's where there's been good wins. Looking at the more holistic view of a whole customer, I think that's still very hard for large, complex banks. They may have the same customer with multiple products, and I think the banks do find it, and Rajiv can tell us about insurers, find it hard to see everything with the same customer in one place. And obviously, once you get that holistic view, you can drive a lot more value because you really understand your customer better.
Yeah, no, I think you are definitely right. I think really building a customer data platform for financial institutions is really something that probably still needs to happen completely, and that's part of the journey. So we are talking about organization, about journey. It's clear that financial institutions have started. There are people in place in charge for that we have interviewed. So the second point of the research and on our investigation is really in this term, so in terms of organization, because it's like, and how do you move from the start to a level which is really at the corporate level across each single division. And so you really start to have a corporate data strategy and data layers and whatever you need, which is at a which is all at the same level, and you start so making efficiencies, industrialize, and if you want, making the processes wherever possible auditable, automated, and so on, because this is also one of the key issues in financial services. I mean, this is an industry which is very much regulated. Auditing is extremely important in this industry. This takes a lot of burden to all the organization across each single product. If you want silos, because banks are still and insurances are still divided into product silos. So and then you have to think about your staff itself. There is a lot in this research who talks about that, but you can see from the answers and from the quantitative part, there is something still missing in terms of, okay, how do I get to a real corporate level at a very good level in terms of quality of data and quality of people and sponsoring of these initiatives. So what can you say again, Monica, on this from other industries? So what are the insights and how can you get it done to scale up really at corporate level with the right sponsors, with the right technologies, which could be maybe the early win that you can have in order to really get to a second and a third level?
It's interesting enough. I think I can't look beyond manufacturing when you're talking about industrializing processes and production of products at scale, because in the end, what we're doing is we're looking at producing data products at scale. And it's interesting what you said earlier, Roberto, when you said, well, you need to put the technology in place. Yes, you do, but you do need to you put the right technology in place. So in manufacturing, the technology there is to help people. The process is designed, the product is designed. The technology is to help people do things that they can't do faster, better, more accurately. And the same for data products, I think. So the reason why I say look to manufacturing is, although they aren't, I wouldn't consider them a leader in data and analytics, they're going down the right path. They started trying to do isolated projects and thinking they'd get value that way, and they didn't. It was just too expensive. If you look at the breadth of data they have across all their manufacturing plants, and remember, some of them have hundreds of manufacturing plants across the globe running 24/7. If you look at trying to get the data from that, which is very specialized data from individual machines looks very different. You need specialized knowledge to understand it. So to get that data in a way that can be used for analytics, just as a very first step, you need to really think about how you can industrialize that. So what I've seen all the manufacturers do, almost without exception, is actually look at the data process. What do we need to get from raw data to enable this to be in a place where anybody can reach in and grab the data they want, assuming they have the right authority, because that data security and access is critical as well, and grab that data and reuse it and reuse it and reuse it, because only this way can you scale to the amount of data products that you need to drive the industrial Internet of Things, which is the vision in manufacturing. So I think they're not that advanced, but look to them, because they're putting the groundwork in place, and they're putting the groundwork in place first from a process design point of view. Where are we trying to get to? And then from a scale, how do we do that at scale? Having one machine learning model or 10 is easy to manage. Employing 1,000 machine data scientists, and they each managing or creating 50 machine learning models per year, and they're living in perpetuum, that's much harder to manage. And I think a great example here, read up on the Volkswagen Industrial Hub. Volkswagen realized that across their manufacturing plants, each product or application, data product application, was used once, and that's not sustainable. And their vision is an app store for industrial analytics. And we're not there yet, but we can see the first products there that are up on the app store, and they can be redeployed. So the same machine in a different factory, or different machines in the same factory, or in the case of the Teradata solution that they put in, we put something in for doing inspection, and it's now being used for insight for process improvement. So really putting in the frameworks to reuse data, but at a corporate level, and everyone getting all the different manufacturing plants to march to the same beat and agree to the same way of sharing data, yet with individual freedom to do the analytics they want.
Well, the idea there of the App Store really struck me. That sounds really smart. I mean, actually, you are right. I mean, it's at the end of the day, if I think of financial institutions, you think of auditing, for instance, how auditing needs to understand how each single machine learning software works. And I mean, yeah, and how many different processes are in financial, I mean, insurance is the same. I mean, there are so many different types of products, but you really need maybe some something which really standardize what you really can do. That sounds really smart, and yeah, I think it's a great suggestion. What do you really think, Graham, on that? I mean, is it a good suggestion? Is there, and what do you think from a financial institutions? I mean, auditing, I mean, that is my thought. It's one of the key problems, no? So I think is how can you allow the regulators or your internal auditing to be really smart when they have to do that? They have to do their own exercises, and how can you standardize the things in order to make the business smarter than before?
Yeah, absolutely. And I think, yeah, thanks for the insights, Monica and Roberto. But from a financial service perspective, I think the level of industrialization does depend from organization to organization. But there's definitely a theme that the most industrialized parts of banking organizations tend to be in the area of the retail customer applications, as Andrew hinted at earlier. These tend to be the most advanced, followed by corporate and wholesale. Then you get to areas like finance, risk, and reg, and these areas tend to be less so, and they haven't really been candidates for investment until recently. Now, many might argue, including myself, that this is a missed opportunity, but in the past, these areas tended to get complaints from the business for being too expensive. So within Teradata, we tend to think of three categories. So we then think, traditional, these are maybe institutions that look at things in a product-centric way, meaning products and services being developed in silos with a budgeting or investment process also being in a silo. Then we've got maybe best in class, which this tends to be by value stream. So there is more efficiency, but again, it's more cottage industry rather than industrialized. And then finally, we get to future state. So, and here I think of, we need financial services to challenge itself, to set the right benchmark. So just listening to what Monica said about the number of models in production. So, we've got a large North European bank that's very proud to have 200 customer experience models in production. But a retailer, they might have tens of thousands of models in production. So, a bank of the future might well want to have a look at retail manufacturing to get those tens of thousands of models. An analogy we could use for this is, well, what if a Google or an Amazon came into banking and brought their ways of working with them? The bank of the future might be very well different from the banking that we see today. It could be like what Uber did to taxis, Google could do to financial services. What I see specifically in the area of regulation is that we've got lots of point solutions which create a lot of duplication. However, we are seeing regulators are starting to drive more of a joined up approach. And just to build again on what Andrew mentioned earlier, more broadly, there's a balance between the centralization model or a franchise type model. So in financial services, we tend to see a divide between what the business wants or the management of the business versus the support functions, so the control functions need. So in financial services, we see it as a business leveraging two parts of the organization, which may be going in the same direction or may not, which, unlike manufacturing or retail, they tend to go in the same direction, and it's one way. There's also a challenge within financial services to get a willingness to commit to a single vision, and there tends to be different budgets for different parts of the business. So I suppose what I'm saying is it's hard to get all stakeholders to align in financial services to a single end-to-end solution, unlike the other industries that Monica has talked about. Having said all of that, the ability to commit on industrialization is a differentiator versus those that just want to save on cost. So in conclusion, I would suggest that specific point solutions are always going to hamper value. And the more enterprise-wide capability you have, the more value you get. And the strong consensus that industrialization is a value driver. So it's really going to come down to the ability to execute on getting this value from it.
And that's great point. I think it's the point of of alignment across the sectors, across the product, across the management is key in financial services. I've seen it myself when I was working in a large banking group. I mean, it's something financial services are not yet used to. So they are being forced by the regulators sometimes, even more than by the competition, and that's the truth. So that will be the challenge. One of the challenges we have started to talk is also regulation, because I mean we have to face the fact that this is the most regulated industry on the planet. And there is a reason, because we have to deal with the people's money from one side and people's key wealth data from the other side. If I think of the insurance itself, wealth or life data anyway, if I think of the insurances itself. So it's obvious that this type of informations, I mean, money at the end of the day is information, is data, are very, very sensible. And so there is a lot of cautiousness. And from the regulators, there has been always a lot of cautiousness historically, when you think about the concerning about, for instance, giving data to third parties, what happens to if I put the data of the clients on the cloud. Myself, I live in Italy. I can personal experience. I mean, the local Bank of Italy, until 3-4 years ago, they were still very much against cloud. So I mean, we are not talking about 20 years ago. We are talking about probably 4 years ago. So I think there is a lot that is changing. Also, the certain pace, which is slow if you look at it from a different angle, but it's happening. If you look at it from a financial service sector, you see that things are anyway changing. But regulation is there, but how we can really not any longer consider regulation as a barrier, as something to slow down this industry, and how can really instead get again more speed, and actually even use regulation, since regulation is happening, as a springboard to accelerate the changes that need to take place. So Monica, again to you and to your experience with other sectors, other industries, is there any suggestion on how can really other regulated industries coming from those industries that can be applied to financial services as well as an insight?
Look, Roberto, you're right. I think if you look at regulation, and GDPR was one that was interesting to me, is the different responses. It scared the daylights out of someone. I heard rumors that there was a retailer, they just deleted the entire customer database because it was it was better than the alternative of having some risk, because they didn't understand the risk. So I think individual companies are going to respond differently. But if you look at the pharmaceutical industry, I spent some years ago in the pharmaceutical industry, and it's very interesting because they're also very highly regulated. But yet they managed to do two things, which I think are interesting. One is, despite strict regulation, they managed to innovate within the spirit and the law of the regulation. And the second example, which I'll come to, is how they used regulation as a springboard, as you said. So the first example is, there are very strict regulations in most countries that pharmaceutical companies cannot have direct contact with the patients. Now, there's good reason for that, because there'll be undue influence. You need that neutral third party of the medical practitioner in the middle. Yet they're going full steam ahead with their beyond the pill initiatives, to help patients manage chronic disease. So as the Western world ages, we get fatter, we get older, we get more and more chronic disease like heart disease, diabetes, cancer, and so forth. And a medicine alone will not help a patient get good outcomes. They need to actually perhaps change their lifestyle. If you're recovering from a stroke, there's exercises that you need to do. And the pharmaceutical company is releasing digital technology and innovation analytics around this, always working with and enabling the medical practitioners as a three-party partnership to improve patient outcomes, essentially. So I think that's good, because this is good for the patient, it's good for the doctor, and it's not directly good for the pharmaceutical company, but they really hope if you follow their regime, you'll also be taking their medicine. So that's good. And the other one, Roberto, that springboard I think is very interesting, especially a lot of the new regulations coming. I'm not sure about financial services, but certainly in the EU, they're really there to both protect consumers, but also to help consumers gain trust and ease their life as we become more and more digital and more mobile. So some years ago, the European regulator, the EMA, introduced a regulation called IDMP, Identification of Medicinal Products. And it stipulated that in great depth, you have to identify your medical product to the regulator. Any changes within that product and formulation, the packaging, any change, minor change to that product has to be announced to the regulator. They didn't do this to torture the industry. They did this because at the moment, if you get a prescription in one EU country, you cannot fill in another EU country because the medicines aren't the same. They're slightly different. The names are different. The box is different. Everything's different. And that's not good for EU citizens. So as soon as this regulation came out, the one thing was clear is that the pharmaceutical industry, including the regulator, by the way, had a desperately sorry state of their data. To pull this together was a nightmare. And here you see the divide. That one sector said, you know what, this is just another regulation. We hate it and we're going to brute force it. Give us the form, we'll fill it in. And the other sector, led by the European Medicines Agency, actually in this case, said, actually, we're going to use the money we need to comply to this regulation to improve the insight into our data. Because if we don't know the same product in different countries, how can we possibly manage our supply chain, our production sites, and so forth? This is not a good state for us to be in as well. So they're the two examples. As one is understand the boundary and innovate within those boundaries, because there's always room, I believe, for innovation. But you have to respect the regulatory boundaries. And the second one is, look, it's going to cost you money to comply anyway. So if you get a new regulation or existing regulation, can you comply more efficiently in a way? And I come back to the data products, that you build a data product, in this case, a full set of information about your medicines, Europe-wide, even global, that you can then use to drive improvements in, for example, supply chain or prescriptions or distributions or marketing.
Great. I mean, great example, really. And it reminds me a couple of things happened to me in the past, but let's have a ground point of view on this. What do you think? How can this be reapplied to financial services in order to get the best out of regulation?
Yeah. And thank you, Monica. And I think we'll try and keep this brief because I think we're running a little bit over. Maybe we go to Rajiv after this one and come back to the next part. But I think it's fair to say that regulation has been a barrier to, or has been perceived as a barrier to, innovation and change, but that's now changing in financial services. So in the past, when there's been a regulatory focus on control, review, and audit trails, that's been seen as something, or perceived as something, that you need human intervention for. However, there is lots of evidence that in many cases, well-designed and implemented digitized analytic processes are better controlled and often give better results and identify more errors and anomalies than humans do. The example there is around AML. So this started as expert judgment and human mechanisms, but now most practices are all about supervised machine learning and insights on what is a changing pattern. I appreciate we've got a wide audience today and lots of different people will be watching on the record, but a lot of the European and global regulators look to the Bank of England and the FCA in the UK for innovation and transformation. So it's worth calling out that in the UK there is a review of reg reporting that happened in September 21, which showed systemic failures across many institutions. Several have been fined and now have remediation programs in place. The regulator in this instance has used, over the last year, one of their more intrusive powers, but I'm also seeing that being used, or similar power being used, by regulators throughout EMEA from work we've done with Central European and Nordic regulators. So my hypothesis on this is that there will be winners, and they'll be those that invest in the tools and infrastructure that can show things like data lineage, audit trail, cost effectiveness, and give you better controls over your data. Just Teradata specific example would be what we do on RegTech acceleration. So we then demonstrate that by bringing the calculation engine closer to the data, that the reporting output is more timely, leverages the better quality data, and actually is at a reduced cost. So, different regulators are on a journey. Bank of England and FCA have been more public about what they're doing with the data transformation program, but lots of EMEA and global regulators are on the journey with them. So in conclusion on this one, Roberto, I'd suggest that where regulation has been seen as a challenge, it has been challenged. So for example, last month in October 22, a Dutch fintech called Bunk, they won a historic court case against the Dutch central bank, the DNB, on the use of modern technology in the fight against money laundering. The Dutch court ruled firmly in favor of a technology-driven philosophy. Now, I'm not recommending that that's a first course of action, but it does show what disruptors can bring to the marketplace in this respect.
Thank you very much. I mean, very, very insightful. It's true that also there is a need, I would say, of global convergence. I mean, otherwise that will be really difficult for everyone. I mean, for all the companies really to manage the complexity that is arising from managing at the global level of data. We've just learned how it is complex just at European level. So can you imagine at global how that could be. So I think, yes, we are running a little bit late. So I would definitely go to the next session, and then we can merge the two with the Q&A. Before the Q&A, we have the pleasure of having with us also Rajiv Malan, who has been part of these interviews, has been interviewed himself. So it's a pleasure to have him in person in these discussions. He is the head of strategic project and business transformation at Aditya Birla Sun Life Insurance in India. I managed to do all the words, to say all the words. I mean, basically, it's a joint venture between Sun Life and Aditya Birla in India, and is a well-known to be a very, very innovative insurance company there. And India is definitely one of the countries I think we will all look in the future, not so far future, I must say. So the question for you, Rajiv, is we have been discussing about that a lot here on the results of the research, on the takeaways also from other industries. And so what do you really think? Is there any particular areas from an insurance standpoint we should be focusing on, looking at this way of how to progress and how to make sure that the companies can really get to a corporate level of advanced data analytics?
Thank you so much, Roberto. First of all, full marks to you for pronouncing the company well. So yes, you mentioned right. So it's Aditya Birla and joint venture between Aditya Birla and Sun Life Insurance. So we fall under Aditya Birla Capital. That's a umbrella company. So where life insurance is one part of it. So a pleasure as well as honor to be here with all the panelists over here. Just to start with, I would surely convey my thanks to Teradata team. I think you guys have done a wonderful job. I've gone through the entire report, and this report was really, really very comprehensive and picked up very valid points. And the interviewees, I have gone through some of the interviews also, very apt interviews and very good suggestions being given by people. One thing which I don't agree with to start with, I'm sorry, I have to say this, I don't agree with this part of the board. I don't see that, okay, if you mentioned that, analytics is falling behind. So in this part of the world, I think the first line which comes into that, okay, analytics is something just falling behind, where people, yes, I completely agree that acceleration is needed and consistency is needed. But yes, financial analytics is doing wonders over here. Not only, I would say, for the insurance piece, we are into lending business also, home loans, housing, health insurance. So all parts, we are using analytics day in, day out. If you ask specifically about insurance, so let me tell you, insurance is obviously, we say that it's a financial product, but apart from financial product, if you specifically ask the purpose of insurance, or if you say the moment of truth for any life insurance, it's a very emotional one, right? So why do we purchase insurance? So though we sell insurance as a part of investment also, but at the end of the day, it is some emotional value which it carries. So when we use analytics, so it is not a pure, I would say, professional, only about the numbers, which can bring out more revenue, more retention, but how can we capture the mind share of our customer? So Roberto, the question which you asked that, okay, what more areas which we need to focus on? To start with, we are using analytics just to have a better customer experience, because customer who invest into insurance, that's a very long-term journey. It's a long product life cycle of our insurance which comes in. There are many footprints, there are many milestones which comes, and how can you use those milestones to serve customer better? That is our primary objective. And how can we create more mindshare? And how can we create that emotional value for the customer? Where, let's suppose, if there is any insurance needs comes into be, then how can they consider Aditya Birla or Sun Life Insurance is the first one to start with, or the first one to purchase from. So we started with this piece that, okay, how can we use analytics into this? So nowadays, customer is spoiled by choices. The kind of choices which we have given to customers, it's a humongous. So customer is not, expecting experience. And I think it was very well mentioned in the report also. Customer is not comparing us with any of the financial products. Customer is continuously being bombarded with various customer experience, which is coming from pizza delivery, which is coming from hospitality, which is coming from any of the travel advisory, which is coming out to be. So all those experiences are, coming to customers, and he's comparing us with those ones. So customer can very well come back and say that, okay, if pizza can be delivered in 30 minutes, why can't you issue a policy within 30 minutes? If, I can have the entire journey of a food delivery application, which is available for me, why can't I see that how my insurance claim is getting into? So all these things are going to count. So customer is not comparing you only with any of the financial product. Customer is feeling that, okay, there is one more opportunity which is coming out, and this opportunity has been served by any of the financial company. So I would not say that, okay, organization have to just compare themselves with any of the financial product. We are in the market, we are serving customer, and customer is going to come back to us and complain to us. And nowadays, customer is very, very vocal also that, okay, if this has not been met, what are the tats? What are turnaround times which you guys are asking for? So all these things put into mind, I think data and financial analytics, which is coming out to be, it's playing huge roles. I'm taking one step further. So we started with customer experience. Now we can very well understand that, okay, we spend too much of our money on analytics until the time you don't get a quantifiable ROI. Till the time your analytics is of no use. So apart from a good customer experience which we are providing, we also need to have how can we generate more revenue. We also need to have how can we retain more customers. How can the revenue can be retained? Retention of revenue is also very, very important. So once we start into the revenue generation piece, the next piece which comes out to be for us is how can we proactively serve customer. Many times now, gone are the days when customer used to come for any query, any request or a complaint, and we used to wait for that. And then we used to, manage all these things within chat. That's gone. Now we have to proactively reach the customer, predicting from our data only that, okay, when the customer is coming back for a next best event. So we at Aditya Birla Capital, we are trying to, predict that piece without customer coming over here, so that before customer feels that need, we are there to serve him. At the same, this is and how can we generate more revenue? Same ways we are going back to customer, giving him next best offer also. What is the next best offer which can be given to him? I would not say it's a cross-sell or upsell, but I would say it is more of a customer needs which has been recognized by us through solid data mechanism and through all the algos. And then we reach back to the customer and offer him that, okay, this is something which is rightly suited for you. So in whole scenario, if you ask me, data analytics is, I would say it's giving a lot of more opportunities, not only to serve customer better, but for the organization also how to generate more revenue, how to retain customer, how to create more mind share, and how, as an emotional, I would say, provider also. So we are always there. So we have just started one more initiative where we are saying we are coming out as a grief counseling also in case of some untowards happen to a policyholder. Then the nominee, we are providing those services also. Have you ever thought about that? Okay, in most pure life insurance companies working as a grief counselor also. So all these things are coming from data. So how the data is, giving us all the patterns, we are working towards that, and that's how we are able to influence more and more customers. Over to you.
No, that's very interesting. I mean, you kind of setting the stage of the future for many financial institutions. So let's put it that way in the Western side of the world. So question, I mean, we didn't talk much about the culture and people. So I think that's a good question for you, given the status you are and in terms of advancement and also your position is there, from your perspective, given the fact that you might be more ahead of many other financial institutions, okay, so is there anything that could help all your learnings on how you can face the cultural barriers that maybe are still inside the organization, given the fact that maybe they are still organized in silos, somebody is maybe a little bit behind? So is there anything from a cultural standpoint that could be helpful to learn from your experience? Any suggestion to break this barrier that to me is probably the biggest one in each single organization?
Very right. I think very apt one. Many times whenever I go for a podcast or these kind of webinars, this is the question which comes most of the time. And I think every time my answer remains the same. I try to find out some other answer, but I think this is the apt answer. In Aditya Birla Capital, what we have done is we have put customer as a prime focus. I think every organization does the same. But how are we doing it? We are actually listening to customer. All senior leadership management team has, that's the culture which we have built up. That okay, we listen to customer, actual customer talking in a call center, actual customer talking in a branches. So we try to find out what kind of concerns customer is putting in front. Whenever our leaders are visiting branch offices or call centers, they themselves sit on a front desk and understand what customer is saying. And we have a very strong connect with our distributors. We have a very strong connect with our front end teams, what customer is looking for. And not only what customer is looking for, I would say, what kind of experience customer wants to have. What kind of customer comparing us with somebody else. As I mentioned to you, that's actual customer who has mentioned to us, pizza can be delivered within 30 minutes. Why can't I have that policy? And that's a very apt one. So recently we have launched, one initiative, which is a global first, I would say, where we have said that, okay, end-to-end policy login to policy issuance is going to happen on WhatsApp. So we send across one message and there are a few 3 to 5 minutes journey and the policy is logged in as well as issued also. So now, why are we doing? Is somebody's looking to us that, okay, you should issue the policy on a WhatsApp? But yes, nowadays, millennials and Gen Zs, if you want to offer this stuff to them, they are not gonna, fill up the longer forms and all the paperwork which they need to have. If you want to allure them, if you want to convince them that, okay, you need to invest at the lower age, you need to have a policy at the lower age, this is the kind of things which you have to have. So technology will also come once you have a problem statement in front of you, once you listen to customer. So that is, again, we listened to some of the customers. We went to a tech company where we were trying to convince the people who were just joined over there, why don't you have insurance? So they said that, okay, my father is going to have the insurance because insurance there is too much of a complication which is there. Though I know that, okay, we need to have a term insurance, but I would say that, okay, the journey is something which only my father can take care of. That was a trigger point to us. Why can't we make a journey which can allow these guys, where they can have the entire stuff happening in front of them, and they know that everything is encrypted, everything is safe, they can make the payment, they can get the illustration, it can be issued. So the more you listen to customer, the more you sit with them, understand what they are looking for, and you provide to them, they consider you as a first choice.
Wow, that's very interesting. I mean, what you said about listening to customers from a direct standpoint really, makes a difference. It happened to me myself, honestly. And yes, it makes a difference when you really have the possibility of listening to them and thinking backwards the type of processes that you have put in place that maybe are wrong, or the type of data that you need, the type of experience that you still need to improve. Yes, thank you very much for Rajiv, for your comments and your considerations. Very, very valuable. I'm very happy we had the time to talk a little bit with you, and I hope we can have it in the future, more occasions. And I would go to the final remarks at this point. We didn't have any questions from the audience. That's a pity. You have been too much shy. So I hope that at least you really have a look to the report, because the interviews which are there, the qualitative ones, are really very good ones. There are a lot of experiences, a lot of insights, I think very valuable to read. So let's go to the final remarks, really thinking, closing about this report itself. As I was saying, the report for me has a great really value, especially in those interviews which come from Peru to Singapore, so everybody can really find its own benchmark, if you want, given the fact that this industry is very scattered somehow across the world. And for me, the big remark, and I invite also Graham to come to me, and I mean, and close with me. The big remark is that each of financial institution has a different stage in a different country, a different regulation maybe, and different organization. But one thing is clear, that the business of tomorrow is going to be built on data. So either you embrace data, your organization embraces data, so you manage to make your organization embracing your data, or in a few years from now, your organization will be lagging behind. Either because there is a next competitor faster than you, or because there is a fintech, or because there is a competitor from a close industry that comes into yours, or even worse, the big tech which decide to invade your space. So I think data, we all know it's considered the new oil. The point is that it's difficult to face. Yes, it might be difficult because the starting point is difficult, but once you are there, you have to do it, and it can give you great satisfactions. That's really my also personal learning, and this is really my own comment. I don't know, Graham, what do you think about it?
Yeah, no, I think you summarized it quite well, Roberto. And I suppose just to conclude, firstly, I'd like to thank all of the participants in the survey. As you mentioned, Roberto, the results will be available after the webinar. If there is any questions about the report, don't be afraid to reach out to myself or the team at Qorus. In addition, if you would like what I'm going to call a rapid start, we at Teradata could come to you to complete a business value assessment or an architecture assessment to help you drive more value from your data and analytics. Or even we could think about benchmarking you against your peers. So please do get in touch with myself or Monica directly if any of these are of interest. I'm not saying we can do them for free, but for the first one or two, we might be able to give you a head start. So thank you again, Roberto, for hosting, and my fellow webinar participants, in particular Rajiv and Andrew. Thank you.
Thank you, everyone. Thank you
Yes.
really very much to both your speakers and to the audience. And as I said, let's read the report and get connected to Teradata.
And thank you for sharing my contact details. We'll leave them on the screen for a couple of minutes. Thank you.
Thank you. As I said, you will receive the report via your email, to your email also with the link to this webinar, which anyway will be published on our website. Again, thank you very much for all the participants. I hope you enjoyed that, and let's stay in touch. Anything you can write to myself to ask to ourselves in Qorus, and we will get you in touch with everyone.